Greetings, friends. This is again Balakrishnan from BALAS Accountancy Special Classes. Welcome to my 31st episode. Well, I hope my previous two episodes have helped you to get settled with the fundamentals of final accounts. In a nutshell, goods-related items move to the trading account, wherein we arrive at gross profit or gross loss by comparing the cost of the goods sold with the sales value. Remaining nominal accounts are placed in the profit and loss account, and the net profit as such is arrived at. Items left out in the trial balance, being either personal accounts or real accounts, the same are suitably taken into the liability side or asset side of the balance sheet. Further, each and every item from the trial balance will normally be shown only in any one of these three components of final accounts. That is, trading account, profit and loss account, or the balance sheet, provided that a particular revenue account amount not to be apportioned between the trading account and profit and loss account. Sometimes they give it like that also. Very rare case, of course. Again, any adjustment entry given below a trial balance being a journal entry, the same has to be taken into two places. One in the revenue account section, that is trading and profit and loss account, and the other being in the balance sheet. This being the case, we have satisfied ourselves that a tallied trial balance has to invariably lead to a tallied balance sheet. Now, what you need to ensure is to master the varieties of adjustment entries. I repeat, master the varieties of adjustment entries. Hence, I have scheduled to work out for you a dozen of final accounts with various adjustments. 6 number of episodes consisting of 2 sums being worked out in each episode shall follow. So, for today's part, let me switch over to the sharing mode. Well, student, first question of the day is question number 15, page number 22.92, DK Goel edition year 2019. Well, we have been given a tally trial balance. I'm posting it sufficiently so that you can write it down. Those of you who could not manage the book. It's followed by 6 number of adjustments. Well, these are plain adjustments. Then and then I will explain. I had arrived at these answers with comprehensive explanation. First, as usual, I am allocating the various items that have been given in the trial balances. Okay, fine. As usual, blue, violet, trading account items, red one, profit and loss account items, black one, balance sheet items. Okay. Now, this is the final accounts. So, the job is very easy now. Adjustment here only wages. We have been clearly told in the question that there is a prepaid wage of ₹40. Hence, I have reduced that rate because only that part of the expenditure which belongs to the current financial year only we should show here, right? And all gas and water, it's in the absence of a factory manufacturing account being prepared, we have to show essentially in the trading account, right? And purchases and sales have been subject to respective returns. So you are quite familiarized with all this trading account because already we have done sufficient sums, right? So I arrived at gross profit 21,240. You can also parallelly work it out at your end and check it. Fine. Let's see whether it's in agreement with the answer. Yes, 21,240. Now, next one, I brought down the gross profit. Other nominal accounts that have been given in the trial balance I have shown here. Okay, represented by red items in the allocation. Right. Here, salary outstanding. Yes, we have been given in the question. There is a salary outstanding rupees 100. So it pertains to the current year. Hence, it has been added. And depreciation. It's a plain calculation. Let's see what was the plant and machinery value. Basically, plant and machinery value 40,000 and land and building value 12,000. Now depreciation rate. Plant and machinery 5%, land and building 10%. Okay. So that has been taken here. This will be the respective amount. And total depreciation I have shown here 3,200. Next one, provision for bad debts and provision for discount. What they have given here? Well, they are very cleverly given the provision for discount on debt is at 3%. But we know that first we have to calculate the provision for bad and doubtful debts. On very good strong debts only we will give discount. So first provision for bad and doubtful debts at rate of 5%. Well, it is like this only. Calculation is that 5% on 54,300 because the debtors amount what they have given here is 54,300. Okay. On that 5% comes 2,715. That I am showing here, right? Now only the other one comes. Provision for discount. So sundry debt is basically 54,300. On that doubtful debt 2,715, you have to reduce. On the balance amount only, you should calculate discount. Okay, that comes 1,548. So that also I am showing here. And manager's commission. This is the way it should be done. The amount before charging, profit before charging into rate upon 100 plus rate. Keep it in mind. When it is after charging means profit that was available before charging this commission into rate upon 100 plus rate. 5 means 5 upon 105. You will get 633 rupees. We can check it also. Okay. So if we check means after charging, I find my net profit is 12,664. Okay. On 12,664, if I apply 5%, I am getting 633 rupees. Right? So my condition has been taken care of. Right. This is because it's after charging. Before charging means, of course, 5 by 100 would have been sufficient. And I have balanced this profit and loss account. I got my net profit as 12,664. Let me check it. Yes, it is there. Now next one is balance sheet. Balance sheet, of course, cash in hand as it is, cash in bank as it is. Debtors original minus first deduction, provision for bad and doubtful debts. Second deduction, provision for discount on debtors, and the net latest value or the latest value I'm showing 50,037. Bill receivable as it is, closing stock as it is, prepaid expenses. Okay, it's an asset. It has been shown here. Okay, double entry effect. One there in the profit and loss account, other in the balance sheet. Land and building subject to depreciation. Latest value I'm showing here. As far as the liability side is concerned, bills payable as it is, capital, this is the given figure. I added the net profit and the drawing given amount 20,000 are reduced. This is the latest capital. And outstanding expenses, we have been clearly told that there have been outstanding expense. Salary outstanding rupees 100. Okay. So salary 100 and The other thing what we have to keep it in mind is that this managerial commission what we have arrived at above. Okay. This is due only. We have not paid it. Okay. Managerial commission what we have arrived at here 633. After all, you know, any adjustment has to come in two places. Yes. This managerial commission is to be given to the concerned manager. So it's an outstanding liability. Hence, it also comes here. So total outstanding expense is 733. Now we find that both the sides of balance sheet is tallied. Let us check it. What has been the answer? Yes, 2,23,377. Fine. So that's all, a plain sum. Gradually we'll take tough and tougher sums. So some more idea I got. At least you got this very serious, predominant, popular item. Manager's commission after charging and before charging difference. After charging means rate upon 100 plus rate. Then only we will get it. On which figure you will apply that one? Get the profit just before calculating this commission on that rate upon 100 plus rate. That's all about this sum. Now let us take the next sum. Thank you. Well, students, second and last question of the day. Question number 9, page 22.87. D.K. Goel, edition year 2019. At the outset, you will observe that we have been just given following balances only. They are not given as a well-prepared trial balance. So, we have to ensure at the very outset a tally trial balance, because only a tally trial balance will lead to a tallied balance sheet. When in the exam hall, if this kind of a question is received, kindly spare 5 minutes and prepare a tallied trial balance. Okay, then you will be very comfortable. Right. I have prepared the trial balance for you. What has been my thumb rule in preparing this trial balance? Simple like that. Debit side, all assets and expenses. Credit side, all liabilities and income. That's all. That thumb rule you keep it. So this is sufficient. And have tallied the trial balance. Now let me prepare the final accounts. Before that, of course, I would like to take up the various adjustments. What are the various adjustments they are given? Okay. There are 6 number of adjustments. One by one, let us take. First, stock 10,000. Stationery unused at the end was, at the end of the year was rupees 400. Okay, it will be like this. Unused stationery rupees 400. Deduct from stationery account in the debit side of P&L account, because this is an asset. Okay, you get a relief to your expenditure. And show us stationery unused in the asset side of balance sheet. So double entry has been taken care of. Don't club it with the closed stock. Closed stock, how you will show? Show in the credit side of trading account and show in the asset side of balance sheet. Anyway, you have done sufficient sums. And next one. Rent of premises sublet received in advance rupees 100. Simple, an advance income. How you will show that? Advance rent on premises sublet rupees 100. Deduct from rent for premises sublet in P&L account credit side. Okay. Show as advance rent in the liability side of balance sheet. Okay. This is mercantile system of accounting. Only those income and expenditure pertain to the current year only should be reflected in the final accounts. Okay. Right. And next one. Provision for doubtful debts is to be created at 10% on debtors. Before that, let us focus what is the debtors amount they have shown here. So the debtors amount is 10,500. Oh, so on 10,500, 10%, 1,050. Show in the profit and loss account debit side. Okay. And the next adjustment is provision for discount on debtors is to be created at 2%. Okay. So how will you show that one? 10,500 my original debtors less the provision as calculated above. It comes to 9,450. These are the good debtors. They are only entitled for discount if I offer. So 2% I want to provide for them. So 189. Show that also as an expenditure in the P&L account debit side. Okay. Next one. Stock of value of rupees 4,000 was destroyed by fire on 25th March 2018. Stock was purchased by paying IGST at 12%. A claim of rupees 3,000 has been admitted by insurance company. The stock destroyed and claim admitted is a very usual thing. There is something, an extra thing has come, IGST part. For that, in case you do not have any idea about IGST, I am going to explain that one. Goods and service tax, where IGST comes. Okay. So what happened? GST is GST, state GST and interstate GST is there. Okay. So whatever it is, it's a tax. GST is paid on purchase of goods and services, and it is collected from customers on sale of goods and services. When we make purchase, a tax element will be there in the invoice. We have to pay that also. Such tax payment we can accumulate and utilize for our future discharging of GST payment. That's why it is called GST is paid on purchases of goods and services, and it is collected from customers on sale of goods and services. When we collect GST from our customers and services, the collected amount we are supposed to pay to the government. However, there is an option. You can set off the accumulated GST what you have paid while making purchases. Okay. GST paid, termed as input GST, is set off against GST collected, termed as output GST. You will be learning it all later when I will be taking exclusively this very chapter. This is a new introduction to a chapter, GST chapter. At that time, so much you had learned. But for this final account sum, whatever is relevant only I am explaining here. Okay. Now, net balance of input GST will be shown as a current asset in the balance sheet. What is this net balance? You have been accumulating your GST on your purchases, and you have been using it also while discharging your GST obligation. A net balance, if at all it is there, that will be an asset because it can be set off for the future obligation. Now, in the event of this GST, that is GST input balance, is utilized or not available for utilization, to that extent, the same has to be decreased from the books. Right. You have been accumulating GST, and when it is utilized, that means while discharging your payment, instead of paying cash, you have utilized this input GST. Okay. So naturally, balance get decreased. And what is this not available for utilization? So you have been accumulating your input GST. In one fine morning, it so happened that the concerned purchased goods have been destroyed. Actually, you won't be able to sell it. So there is no point in keeping that part of input. So that also has to be reduced. That's what exactly happened here. Here, since the purchased goods kept a stock, got destroyed, the GST pertaining to this purchased goods included in the input GST account is to be removed because it is no longer available for utilization. Okay. Well, item number 5, once again I am reading. Stock of the value of rupees 4,000 was destroyed by fire on 25th March 2018. Stock was purchased by paying IGST at 12%. A claim of rupees 3,000 has been admitted by insurance company. The relevant adjustment will be like this. This is practically a journal entry. You know, every adjustment is a journal entry. So, loss of stock by fire account debtor 4,480 to purchase account 4,000 to input IGST 480. Well, the explanation is like this. Why purchase has been credited? What we have been told here in the question, stock for the value of 4,000. Okay, so that much stock is not applied for sale. Whenever a purchased item is not applied for sale, to arrive at the proper cost of the goods sold, we have to reduce that much value from the purchase. We are done the similar way in case of drawings or purchased goods taken by the proprietor, and also purchased goods utilized for the purpose of advertisement, etc. Similar is here also. Okay, it is not applied. It cannot be applied for sale. It has been destroyed. Hence, I credited and reduced the value of purchase so that I get the proper cost of the goods sold. And why input IGST is to be credited, I have given you sufficient explanation just now. Okay, 4,000 is the cost. On that 12% IGST is involved, so I have credited. Okay, 12% of 4,000 is 480. Because my input IGST is otherwise available as an asset. You will see in the question itself. Yes, input IGST overall 5,000 rupees is there, right? But out of that 480 you have to reduce now. It is not available. Okay, since the concerned purchased goods is destroyed, you have to reduce the IGST part thereon also, because income tax office, I'm sorry, because the GST authorities will tell you, listen, as far as we are concerned, you never purchased it because you cannot sell it. Okay, when the purchased goods got destroyed means you cannot sell it. When you can avail your input credit or the relevant sale. Suppose you purchase an item for 5,000, thereon 500 rupees input credit is there, and if you sell that item, then only you can adjust your output GST. I explained to you just now. As far as this item is concerned, it is no longer available with you. Then how can you sell it? Only purchased item has to be vis-a-vis matched with the sold items. Then only input output adjustment is practicable. You can't sell it. So that input IGST you must not keep as an asset. You can't avail it any longer. Hence, that is also credited. An asset is credited means value get decreased. You know that. Okay. Now, insurance company has agreed claim, debit the one who owe you. So 3,000 I debited. And my total loss was for 4,480. So there is a net loss of 1,480. That has to be absorbed my profit and loss account, debit it, and credit to the loss of stock by fire account. So this and this account got nullified, a debit and credit. And let's examine what is the effect on the final account. 1. Rupees 4,000 will be deducted from purchase in the trading account. This credit in the purchase account means it has to be deducted. Okay. Rupees 3,000 will be shown in the asset side of insurance claim. Of course, this party is practically a debtor for me. He owes me money. So I will show in the asset side of my balance sheet. Rupees 1,480, that is net loss. Okay. Will be debited to P&L account. Any loss has to be absorbed by the profit and loss account. Rupees 480 will be deducted from input GST on the asset side. I explained sufficiently. This 480 is no longer an asset you. Input GST to that extent you have to reduce it. Fine. And the next item. Bank loan has been taken at 12% per annum interest. This way they give it because you should check whether you have paid the bank loan properly bank loan interest properly. Okay. You will find that you have paid your interest charge by the bank only 450. Is it the amount you have to pay? You have to check it. Well, it is like this. 12% on a bank loan of 5,000, one full year it is 600. Now, of course, you can ask. It may be that during mid of the year or during the year only it has been taken, means will it come 600? Proportionately, right? Well, it's a good question. In the absence of specific mentioning, we will presume that this is a continuous bank loan. I mean, the year beginning it was there, or in other words, when I closed my books of accounts last year, this bank loan was there, and it is still there in this year, and also means it sustained me one full year. Hence, one full year's interest 600. Okay. However, you paid 450. The balance outstanding is 150. This 150 you will show balance amount in your liability side of balance sheet. As far as the profit and loss account is concerned, the bound expenditure you have to show, that is 600. 450 paid plus payable 600. Okay. So these are the adjustments. Now let me see the final accounts one by one. Trading and profit and loss account, you are an expert by this time. Only wages and salaries. Why I have highlighted like this is that they are not given as the bifurcation. How much is the wages and how much is salaries? And since it starts with the wages first, we will attribute it to the trading account. Okay. And purchases, we know that return outward has to be reduced, of course. And stock destroyed, already explained, that also has been reduced. And this is the net value of purchase, right? And sales as usual, subject to return inward. And my gross profit is 21,100, which I have brought down here. Let us check first whether this is in agreement with the answer clue. Yes, 21,100, it is correct only. Fine. Now, commission as it is, rent 500, less advance rate. Okay, I already explained you. So 400. Advertising okay, lighting okay, carriage outward okay, discount okay, trade expense okay. Wherever adjustment is there only, I am supposed to explain to you. Otherwise, as it is reproduced here. Stationery, subject to adjustment of closing stock of stationery, because this is the real consumption of stationery. Consumption only is the real expenditure, not the purchase. You have to consume and purchase it, then only constitute as an expenditure. Okay. And interest, I just now explained to you. 450 is the paid amount plus payable. Total expenditure for the year is 600. Loss by fire also I explained you. Provision explained. And if you balance profit and loss account, we find a net profit of 7,581. Let me check up that also with the question. Yes, 7,581. Then now let us move to the balance sheet. Cash in hand, okay. Sundry debtors subject to successive deductions, provision for bad and doubtful debts, provision for discount, you get 9,261. Closing stock, mind, closing stock of goods 10,000. Stationery unused has been separately shown 400. Insurance claim, they owe me 3,000. Input IGST, there was originally 5,000, 480 is no longer available, hence it is 4,520. Furniture, plant and machinery, freehold property, they have not mentioned anything about its depreciation. Hence, as it is, it reproduced here, right? Sundry creditors, okay. Now, advance rent received. Any income received in advance is a liability. That is shown. That advance part only. Loan from bank 5,000, and we know an interest 150 more is payable. So practically, it is 5,150. Capital, this is the opening balance. I added my net profit and drawings. Drawings, they are not given directly drawings, but we had to infer that life insurance premium, that is nothing but self, anything self, personal purpose means it is nothing but drawings only. So the latest capital is 47,081. Both the sides of the balance sheet is tallied. Okay. So two sums I explained to you. Each and every adjustment has been sufficiently explained. you kindly practice it using the question already taken down at your end. Practice it yourself. In case of any doubt, whenever you get stuck, only you resort to my video. Okay. Thank you. See you soon in my next episode.